All right, boys and girls. All right, so the feds met yesterday. That would have been 10/29, and they did a rate cut. Anybody in the mortgage or the real estate industry, and almost every client I know has already called me and asked, what's this mean? Is now the time to buy? Are the rates coming down? All right, so today we're going to talk to one of our lenders, Nick Lewis, who was on our last video about the government shutdown. And we're going to ask him, what did the rates do? Everybody thinks when the feds cut rates, we automatically cut rates, and that's not the case at all. So we're going to talk to an expert. Let's get after it. All right, I just want to give you a heads up. Our office is doing our annual chili cook-off. So we have a lot of people here, and we have our fixings, and we judge our chili cook-off every year. And because I'm not much of a cook, I'm our official judge that I made for myself, because that's not a real role. Nick.
Ben, what's up?
The feds just had a rate cut yesterday. Do you have a second?
Yeah, absolutely.
To explain it again?
Yep.
Are you ready?
Cool. So, Fed met yesterday. They announced they did cut the Fed rate again, 0.25%. That doesn't mean what everybody thinks it means, because the mortgage rates aren't directly tied to that rate. Leading up to that, we traditionally see mortgage rates improve, or come down, but often, which happens quite a bit, is that they will sort of self-correct afterwards, and we saw the rates in the market get a little bit worse yesterday, and then this morning they opened a little bit worse, but they're starting to come back. So when you look back kind of over the last couple of weeks, we're pretty much flat at this point from what they have been. Earlier in the week, they were getting, like, from Wednesday and Thursday leading up, or Tuesday and Wednesday leading up to yesterday, they were improving, but then they've dropped back down. So I sent you a little chart on the what the market was doing, and if you take a look at that, you'll notice some red and green bars. Now, what I see is when that graph or that bar graph is high, that means pricing is better, which means rates are lower. I know that confuses some people. So when you see a green bar shooting up, that means the rates have been improving, which is what was going on Tuesday and Wednesday. And then on Thursday, you'll see it started high and then went red way down low. That means we lost some ground after the Fed meeting, right?
That was right at the meeting.
Yeah, and a lot of that was because they said the upcoming meeting in December, they're probably going to drop, but the confidence that it would drop, it was less. It came in lower than that. And they also, because of the government shutdown, they didn't have any predictions as far as what the inflation was looking like, but they did say that it is higher than what it was previous in the year. So those combinations of things and some other stuff had the market worsened yesterday. So this morning we opened up low, but it's coming back a little bit, but we're relatively flat. So there's nothing to be shocked about what happened yesterday.
Real quick, do you have those numbers that you can go over for, like, let's just say conventional FHA, VA?
Yeah.
Like what rates are looking at?
Yeah,
right now?
I can't get too specific, because once you say certain things, you got to include APR. Like, I do a rate sheet every Saturday, and if anyone wants that, feel free to send me your email address, and I can put you on that list. But so, like, with your FHA, we were looking in the high 5% range, where they a lot of times were in the 6 for such a long time. So last Saturday till today, when I looked at the rates, exactly the same. Same with VA, they were looking at in the high 5s, still in the high 5s, which is great that we're at least under 6% on the government stuff. Home Possible, which is it's not a first-time home buyer loan, but it is conventional, and as long as your income is under 80% of the area median income, you can qualify for this enhanced rate, and it's in the low 6s at this point, and it's been the same in the last couple weeks. And then traditional conventional also is in the lower to mid 6% range. So, but we're still hovering around almost a 3-year low on the rates right now. So everyone should probably get back out there, and if you either refinancing or want to buy, it's a great time to do so.
All right, Nick. Well, thank you for explaining that to us, and we'll see you for the next breaking news.
Oh, all right.
All right, so that's the mortgage rate side. That being said, feds cut mean a lot more. It's inflation and other things, but we're not going to get into all that. I'm a real estate agent, not the lender. We do real estate. So if you guys have any questions, you can always reach out to us at any point. Nick, if you drop your email or email me, my email is in my bio and all that other stuff. We can put you on that newsletter, and we can also put you on his weekly rate sheet, which is actually really cool, because I get hundreds of emails a week, and I never pay attention to most of them, except when people want to buy or sell a house, but a lot of it's spam. Nick's email, I check religiously every Saturday, because I just want to see where the rates are at. And so it's a good indication of where we're going, and also to inform our clients if they have those kind of questions. So if you guys have any questions, again, feel free to reach out at any point, and we'll see you on the next one.